What's up guys, welcome back to InvestingPH. For the end of September, I have invested a total of 2,071 pesos and my portfolio's value right now is at 2.27 million, giving me a 9.68% return or 200,471 pesos. Now if you look at the market so far, it's still down big at a negative 22%, same as FMETF, which is a fund that tracks the PSCI. It's still down 18.59% from the day I started investing. Its returns are slightly better as it accounts for dividends reinvested as well. Speaking of dividends, this is the only reason why my portfolio is in the positive. My dividends this year have now surpassed last year's amount, which is now at 89,864, and there's still more to come this year. I'm certain that I will breach the 100k milestone, which is outstanding. This is money flowing into my account just by sitting and holding all the stocks I own. It doesn't require me to buy and sell actively, so it's a very easy job. The total dividends I received so far is 223,084, and if you look at my monthly chart, September was my biggest month, giving me 18,129 pesos, and for the past 12 months, I've earned 118,299, or an average monthly dividend income of 9,858. That's why I'm certain that I would breach the 100k this year, because if all the stocks I own just pay the same amount for the remaining months, then I'd get this amount. This for me is the biggest reason why I can stay calm even when most of the stocks I own are still in the negative, because I don't just look at capital gains, I look at the entirety of my returns, which dividends are included. Since I know the market is still down big, I'm not concerned at the very least because I'm ahead of its returns, and while waiting for it to recover, I'm still getting a decent amount of returns from my dividends. That's why I advise you guys to have your own portfolio tracker, as most brokers here in the Philippines don't show the total return based on the amount of money you just invested. No, it shows the amount of returns on top of the dividends you reinvested and all the stocks you sold and reinvested into your portfolio. That's why in my brokerage account, my returns are still in the negative, as it doesn't compare my portfolio's value now to the money you only put in. Anyway, I also want to discuss the recent tender offer of MPI, which was credited to my account at last. It was almost a month of waiting, but it was worth it. My returns from MPI, including all the dividends I received, amounted to almost 50%. This is already after taxes. So as I'm always saying in my channel, all capital gains and dividends are reinvested back into my portfolio. For the past week, I've been constantly buying a lot of stocks, and the timing was just too perfect. Most of the stocks I own have plummeted from the recent trough of the market. The stocks I bought were Globe, Metrobank, Security Bank, DNL, DDMPR, MREIT, Pure Gold, Costco, FLI, and added some to LTG as well. Now, I've seen a lot of comments asking if I'm concerned about LTG, since the taxes imposed on their tobacco product can hinder their growth in the future. Well, if you look closely, although this business is a big chunk of their income, it's not the only company they hold. They have banks, alcohol, real estate, milling company, etc. In the first half of the year, tobacco accounts for 45% of their income. The rest is 55%. The largest of that 55% is their banking business, which is PNB. So I look at it this way: do you see LTG's business being obsolete 10 years from now? No, and they are growing their other businesses. If you look at their financial history, even after the tax implications on them, they are still managing to grow. And what I also like about LTG, they're handling their debts well. Without their bank holding, their debt to equity ratio is only 0.13, meaning for every 1 peso of their equity, they only have 0.14 peso of debt, which is very good. They can easily allot more money to grow their other business, and I believe Philip Morris would release new products that aren't affected by the taxes imposed on them. And I also look at how fast will I get back my money from my investment. Since I only buy LTG when its price is low, my dividend yield is 13.3%. This means I can get back my money in less than 7 years, and with compounding dividends, less than 6 years. So this easily answered the question if I'm concerned about my investment in this company. No, because the company is doing well, they are handling their debts well, and so far with the dividends I'm getting, I can get back the money I invested in this company in less than 6 years. And remember, LTG can easily maintain their dividend payout because it's only 7% of their earnings, meaning they have a lot of cash left to grow their businesses. So I'm not at all concerned, and I would still buy this company even more if the price would drop below the average price I bought it for. Now, if you notice why I don't just buy one company every month, well, I like to balance my portfolio. As I am focused on dividends, I want my income to be spread over different months. But let me be clear, it doesn't mean I just invest in random companies. I invest in the companies I've researched and have concluded that this is undervalued. Let me be clear on that. I believe in proper diversification. So for those who like their portfolio concentrated on a few stocks, then I respect that because that's your strategy. For me, the important thing is you can maintain it. You're investing in good companies and you can sleep well at night without worrying about your investments. Sometimes I even forget to look at my account for a week. That's how relaxed I am in the stocks I own. Now before we continue, if you're wondering where I got the graphs I've shown a while ago about LTG, well, it's from my favorite tool that helped me out tremendously in my investing journey, simply Wall Street. I know I always mention this in my videos, but I just want to share to you guys this amazing platform because for a beginner investor, it can help you out in filtering stocks easily. You don't need to join those investing groups that even cost more than this platform. And if you don't want to avail of their paid plan, which by the way, if you do and use my link, you get a 40% discount, which is only limited to 100 subscribers, so do subscribe using my link. Anyway, if you don't have yet that money, they have a forever free trial. This gives you limited stock analysis per month, which is still helpful. If you try to analyzing companies, you jump from website to website, and most of it isn't even complete, which can be confusing if you're just starting. This platform has it all, from portfolio analysis, stocks, filtering tools, and also gives you updates when companies release their earnings, when insiders are buying, and when the stock falls below your computed buy price. If you don't know how to compute it, they have it for you as well, and they give you the option to choose from discounted cash flow or what analysts think. So try this out now. You have nothing to lose. Not only are you easing your investing journey, but also helps my channel out tremendously. Thank you. Now back to the video. With a buying spree, these are all the stocks I own. I've been buying DNL ever since its price fell down 6.50. With it has now surpassed Megaworld, taking up the third largest holding in my portfolio. Metro Bank as well climbed to the 7th place. The rest stayed the same. Globe is still the largest, followed by LTG, and with MPI gone, my portfolio has 19 stocks. If you group by sector, holding companies 19%, real estate 15%, banks 17%, REIT 13%, services which is Globe 11%, energy 7%, industrial which is solely DNL 8%, retail 6%, and index fund 4%. So that's about it for this monthly update, and I also want to reply to those asking me why I'm still investing in the Philippine market even though it has been stagnant for a long time. It's funny because I saw a code which is a good reply to this. The stock market is the only market where things go on sale and all the customers ran out of the store. This is basically the problem. If you look at the mindset of investors, they even want to run to a market that is exceedingly more expensive. So how does this relate to the question a while ago? Because the reason why I'm investing more in our market, because it's on sale. I can buy a lot of great companies that give me a good amount of dividends for a cheap price. And may I remind you that no matter how much I earn from dividends, I'm only taxed 10%. There are so many advantages here, and all I have to do is to just sit still and wait. My dividends have been growing exponentially because of this, and from the money I'm getting, it's like earning my SSS pension or earning a salary from a small condo unit, and I can easily reinvest it back to earn me more money the next year. But I get it, not all of us can wait 10 or 20 years to get rich, but the problem is, most people don't even start, which for compounding is the key. If you start early, you have a big advantage. Some not only don't start, but also go back to zero because they try out those investment schemes that offer huge returns in a matter of months. So for me, you don't have to put all your money in stocks, just have a certain amount that you can comfortably put in and forget about it. Don't look at your investments every day. It doesn't work that way. Just put your money in good companies, reinvest every dividend you get, contribute every month, then chill and wait. I've been doing that for years now, and so far, even though our market is down big, I'm doing just fine, and my passive income is climbing every year, and it has been a stress-free journey for me. I can do other things like improving my profession, playing sports, etc. Now, I made a video about this on what are the things you need to know first before you invest. I suggest you watch it. It will definitely prep you up. With that said, I hope you've learned something from this video, and if you did, be sure to click the like button and subscribe to my channel. Thank you and see you in the next video.